Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for April 3rd, 2017. I'm Frank Ochoa, aka PivotBoss. Welcome to the new month and the new quarter of the year. What we're looking at here is the daily chart of the ES right now. We are trading in a narrow range at the moment over the last 3 to 4 sessions between 2354, 2368 for the most part. Right now we have barely a 7.25 point range in the ES. We've been averaging about 19.25 per day over the last 10 sessions. That's 38% of ADR right now heading into RTH. What I mentioned before is this 2354 is still very, very important. The bottom of this key range here and holding below that zone or rejecting at it would open up another push higher back towards 71, 76, and perhaps even into 2390. Failure to hold this level suggests a retest back toward these recent lows, 2330. And again, as I mentioned before, anytime price pushes into this zone right now between 2300 and 2310, you're likely going to see bulls come in and defend very strongly. We've been in a very, very bullish uptrend. All pullbacks have been buying opportunities, and right now 2300 remains the major pivot in the charts. We talked about 2307 being a great buy zone. We came within 10 ticks or 10 handles of that level. So if we were to push down, it would still be a buying opportunity on a longer term basis. Right now, shorter term, got to keep an eye on 2354. All right, let's take a look at the intraday time frame. On the intraday time frame, again, very, very modest range heading into RTH at the moment. Chopping and trading around 1-day VPOC, holding below 5-day VPOC. At the moment, 2356 up to about 67. That's the current range for the most part. Fading the edges. So up here, 67, 68. Look for rejections and fade it back down. Down here into 53, 54. Watch for rejections and fade it back up. Right now, that's the current approach to the market at hand. But once we get expansion out of this range, we could see a unidirectional move toward those targets we talked about in the higher time frame. Let's take a look at crude oil. Here's a look at crude, the higher time frame. Crude, right now crude is having a very, very narrow inside day at the moment. There's a lot of day left, obviously, but crude oil right now heading into RTH has a range of 28 ticks. There it is right there, 28 ticks. It's been averaging about 108 ticks per day. That's 26% of average currently. We talked about before that this strong rejection low here implied a move toward 5106. Price got halfway there and failed and had to retest. We were looking for absorption here, and then stops came out, and then another rejection off 4709. We really started to change our tune once price got above 4730 that day, and especially once price got above 4850 to 4840 on this day. That's really when we said, okay, above these highs squeezes into 5106. And you've seen the continuation so far. It's been higher lows day over day. All pullbacks, this is the morning pullback low, upper. Morning pullback low, higher move. So right now we're seeing a little bit of a pullback low here. Basically holding 50-20 or so would suggest a continuation higher overall over the next couple of days toward 5106 and perhaps at 5171, which is the FOMC key level from December 14th. So more upside here for crude. We'll be talking about higher time frame crude as well, looking out over the next few months later on this afternoon. So if you are going to be around this afternoon, join me for the April monthly market outlook this afternoon at 4 p.m. You can use the PivotBoss login here for join me, but we'll be talking about longer term moves here for crude because there could be a great move coming in addition to this continuation higher. If we look at the intraday time frame here it goes. On an intraday basis, after the recent rally, so here's the recent move up, right? Now we've seen sideways, and that's digestion. So the idea typically is to fade the edges. So when price gets down here, look to fade it back up. If price gets up here, look to fade it back down. But you got to stay in the direction of the trend for the most part. So for when price comes back this way, it's a better buying opportunity than it is to fade this way. If you're fading this way, you got to be much more risk averse. You got to know that you are counter trend, and as long as you know that, that's fine. But overall, this thing continues to trend up, so fading these opposite edges makes a lot of sense at the moment. All right, let's take a look here at the NQ. The NQ has been quite bullish. Right now we're in a narrow range, but the NQ currently has a range of about 18 handles today. It's been averaging about 50.25 per day over the last 10 sessions. And we've seen a recent move to the highs of the range, and now we're sitting there right at 54.40, right? 54.40 was the level we were talking about before. We talked about, on this day when it started to play out, it was a huge rejection. We were not going lower. So after we finished strong, we talked about any pullback into 53.61 would be an opportunity to buy and squeeze to 54.40. Once it gets up here, it could be an opportunity to fade back down. So we've gotten the squeeze up. Now we're sitting right at the level. 1, 2, 3 days here. And this is what we talked about before. Once we reached it, I said, I'm watching for signs of rejection here. But it may take 2 or 3 days of sitting up here before we do anything. And that's kind of what's happening right now. We haven't really gotten confirmation that we're going to move one way or another. But the key level to watch is 54.20 here on a break. Should it break, we likely start coming back down. Overall, remaining above that zone just continues the overall price discovery phase to the upside. At some point here, obviously you'd expect more range movement, and that's what we've done so far. After this big rally up, we've jiggled back and forth and are starting to develop that range up here. So the expectation still could be a fade back down and back up over the next month or two. So right now, watching this area to see, do we fade back down or are we going to stay up here for now? Let's take a look at the intraday time frame real quick. On an intraday basis, again, in the range right now, sitting up at 3-day highs after a rally. 54.40 is a big key level here, but we're chopping above and below it. That's 5-day VPOC right now. 5-day VPOC is 54.40. Here's 54.52. Down here is 54.20. That's the current range right now that's fadeable at the moment. You can fade up here back. Should price come down here, it could be a great fade back up. Until we get outside that range, though, we're likely going to see further range activity. Lastly, let's take a look at gold futures. Here's a look at gold. The higher time frame gold shows that we're also in a range very similar to ZB right now. Both have rallied. Both are sitting in 2-week ranges at highs. We talked about before that we had a move above 1205 brewing for a squeeze back up the range toward this pink level, and that's that orange or gold level, which is 63.20 to 64.90. We got very close to it and didn't quite get it. So for all intents and purposes, the move is pretty much done off of that idea. Now the market's building out up here, and we're building more energy. After bulls have defended pullbacks into 1240, the expectation would be for at least a push into that zone to see what it's made of here. So there could be a little bit more upside, and then depending upon what happens up here, we're either going to fade back to value or we're going to start to see an attempt to push higher toward 1300. At the moment, I'm more inclined to say that there'd be a fade back down and we'd build out before we try 1300. So I think there could be a nice little test up here, and it's going to be very important to see up here what happens, because that could influence the next move over the course of April. If we look at the intraday time frame down below, again, the expectation right now is that as long as 1240 is holding, we have a shot at continuing higher. And at the moment, you can see a little bit of support right here of about 1246, 1247, where bulls have come in to defend. Price got below there into 1241.5 and is now above. So right now, the absorption point is 1246s. Every time price comes into 1246s, bulls are trying to defend. There are also sell stops below there that would trigger a push to new lows. But right now, bulls are defending 1246 for a shot at 1252s. Above 1253s opens up 1258 to 59. So right now, that's the level to defend at the moment on an intraday basis. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Again, quick mention, this afternoon you can join me. It's a free monthly market outlook webinar that I'll be hosting for April 17 in the new quarter ahead. We'll be talking futures, some stocks, and some cool new Masters news coming out as well, especially for those of you that are into NinjaTrader and some of these other platforms like Thinkorswim, IRT. We have a lot of great tools. We'll be making some announcements here later on this afternoon. So a lot of great stuff coming up this week. Looking forward to it. Everyone, trade well, and I'll see you soon.